Hello everybody, it's Tuesday and that means it's OCTA time, and this is a fun one today. So we have a lot of stuff to cover and we're going to start a little bit differently to normal, but the reason for the name of this video is because everybody is worried about the Fed and inflation, but at the same time everybody's sick of it. It's like, ugh, why? So now I think everybody's kind of putting that story behind them and looking forward. That's the way the markets need to be. They need to be forward looking. And that's exactly what's happening today. So despite the slightly negative number, the markets really did very well. And we'll talk about that too. So let's just jump in. And that's the name. And we are edutainment. We are not financial advice. And you guys know that. So if you want to pause the video, read that disclaimer, you can. First of all, we have a predominance of bad news today, but it's not really that bad, but there's more than good. And that's the way I do this. Whatever there is most of is what I begin with. So we'll end with the ugly. There's only one piece of ugly news today, which is good, and a lot of good news, and some very interesting news too. So let's jump in. First of all, there was crypto fund outflows. This is not good. We did see after 4 weeks of positive, we had the first negative week, but it was minor, only 7 million, not a big deal. And it was mostly Bitcoin, believe it or not. Bitcoin lost about 11 million in the funds, and some other assets gained. We'll talk more about why that possibly is by looking at on-chain metrics in a minute. Let's look at the market for the last week divided by Bitcoin. You can see here, everything is kind of red or pink. If it's red, it means it lost about 5%. If it's pink, it lost under 5%. And you can see that Matic is up and HBAR is up and Tron. You know, names that we don't normally talk. We talk about Matic, of course, sometimes, but a lot of other red there as well. And this really paints a picture of exactly what's happening, especially when you look at Binance down 8% against Bitcoin, because the SEC has Binance in their targets. And you can also, from this, you can look at the potential flight to safety, people moving out of riskier assets into Bitcoin itself. Let's look at markets based in US dollars. You see Bitcoin for the week is down 2.43%. After a very good day today, up over 2.2%. So it nearly clawed all of that back just in a few hours today. ETH down 4. I said Binance down 8, etc., etc. Avalanche, Solana, Doge, XRP, Sheep, all the meme coins, all kind of down as well. So not the best week, and that's why probably there's a predominance of bad news. Let's talk about one interesting thing from our friends at Econometrics. And I thought this is very interesting. This is an analysis of the last 3 years of Bitcoin compared to many assets: S&P 500, NASDAQ, MicroStrategy, Marathon Mining, Coinbase, Square, or the Block, Ethereum, Dogecoin. I don't know why they put Dogecoin in there. Gold, dollar index, US 10-year Treasury, and the Eurodollar. Now, to understand this as an eye chart, and forgive me for those that have a problem distinguishing between red and yellow. I'm not that good at it myself, but deep red means high correlation. Deep blue means inverse correlation. And yellow means no correlation. So we want kind of more yellow where we see it. And the real interesting thing is what happened after that big red line in the middle, the C19 crash. So we got kind of the year and a half before and the year and a half after. And it's clear when you compare the correlation patterns with stock indices and Bitcoin stocks. Before March 2020, they were uncorrelated. And after, we see the persistent orange pattern, which means more correlated. You can also see the inverse correlation with the dollar index down at the bottom. That's the blue. And then after that, you can see technology and S&P 500 are getting closer, more aligned, more correlated. MicroStrategy, very correlated, but not as much as ETH, which will really surprise you. But I attribute that to the fact that MicroStrategy is only traded for 6.5 hours a day or something, whereas ETH is 24/7. Therefore, you can get the correlation much better. And it is a slight inverse with the 10-year. Now, the team from Econometrics that put this together, they said they are waiting for the day when JP Morgan will start selling you the new 60-40 portfolio. That is 60% Bitcoin and 40% bonds. I thought that was very cute, very funny. But there should be more allocation, especially when you look at this chart. It kind of makes the case for making Bitcoin part of your portfolio, especially when you want to balance out your portfolio and add it against assets that are inversely correlated. Very important. Let's talk about another piece of bad news, okay? And per this chart, Asia, particularly places like Korea, they are considered the smart money of the Bitcoin ecosystem. And they flipped bearish for the first time since the FTX collapse in early November, while the West continues to buy the local top. So what's going on here? So if you look carefully, you can see the green. The green has flipped negative. Green is Asia month-over-month price change for Bitcoin, and EU is blue, and red is USA. And you can see red is still buying, but it is actually turning around. But the question is this tragic for the Bitcoin price? Let's find out. Let's drill a little bit deeper and try to understand who is selling. So this is the from the team at Glassnode. You can see here, this is the color charts I talk about who was accumulating. And back in November and December, I was very excited because every single cohort was accumulating. But then, right now, over the last couple of weeks, you can see red for the cohort. That is the 1,000 to 10,000 Bitcoin holders. They have recorded the sharpest change in behavior, and they have moved from net accumulation to marked distribution, or what I call dumpage or dumping. Everything else is kind of neutral. Like when you see yellow, it's neutral, and blue is accumulating. And there's no blue. It's like everything is parked, everything's fixed, except the down pressure, so the 1K to 10K. And I always said as well, the new largest cohort was the 1K to 10K, but the new one is the 100 to the 1,000. They will be the new people that control the majority of Bitcoin, to the tune of about 26% of the total. Now let's look at whether we are out of Bitcoin season. Yes, we are. Quick reminder, this is when the majority of altcoins, top 50, beat Bitcoin over the last 90 days. And again, despite what you would think, with the flight to safety, with all the Binance, SEC, Paxos news, you'd expect this to be stronger down, like sub 25, but it's not. Because even looking at today, you got names like one of the top performers is the Graph. We've been talking about the Graph a lot over the last month or so, actually the last 3 months. But that's been doing really well. So again, it's a mixed bag, and you got to be very selective. You got to be like a surgeon to pick out the winners and not hold on to the losers. Now let's look at detailed flows by assets. This is exactly why we do this every single week. And thank you to the team at CoinShares and James Butterfield for putting this together. Multi-asset investment products did see outflows of about 2.4 million last week, but some were positive. The two big positive ones were Ethereum inflows of 5.1, going counter to Bitcoin. Very important. It's normally the other way around. And Solana had 800,000 flow in. Also a little bit into Cosmos, enabling interoperability between chains. Cosmos saw an outflow of about 1.8 million. So it's, Cosmos saw an inflow of 1.8 million. And other names there you can see were kind of mixed, short Bitcoin, etc. But they were the big movers. Oh, Polygon, 400,000 flew in there too, which is good. So that's kind of the lay of the land. Again, you'll see here, ETH and alts mostly up, Bitcoin down. So let's talk about the L1 DAU race, as I call it, the daily active user race. And I like to check on this pretty much every day to see what's going on. But there's a couple of things that are interesting here. Obviously, Bitcoin has had tremendous traction with their new NFT activity. We'll talk more about that in a minute too. But what's interesting here is Aptos has really come back down to earth. Again, they only have 8,000 daily active users. After that, you've got Fantom, 39,100, but they're coming up fast, really, really growing quickly. And I believe it's only a matter of time before they could exceed Cardano at 56K. Then you have Near, 68K, Polygon, 265K, Solana, 302K, and of course, Ethereum, 382K. So that is kind of the lay of the land of who matters in this space. Remember, it's all about adoption, product market fit. Who wins the day? That's why this is such a critical metric to look at. Now, let's talk about a bit of macro for a second, because it impacts everything. And this is my inverted yield curve chart. It's the 2-year minus the 10-year. And this basically, in simple terms, we've talked about it a lot over the last year or so, but it leads to a tightening of credit and a slowdown in economic activity, which can in turn lead to job losses, which is already happening. And it's happening way faster than the Fed or wherever there are 320 PhDs can actually count, because they still think the job market's wrong. Well, it's not. And this is also bringing about reduced consumer spending. In fact, there's a lot of interesting videos on Twitter where you can see people just walking wholesale out of stores, stealing stuff as much as they can carry, and declining corporate profits again. But normal is when long-term interest rates are higher than short-term rates. But now you can see this is a world record here going back to the 80s. We've never seen it so inverted. It is beyond crazy. So the world is broken and getting more broken, or maybe, as we said before last week, I think the yield curve maybe doesn't matter anymore. So it's a new normal. Everything will be reset one day. Let's look at stocks the last 7 days. A very good week for Tesla and Nvidia and Microsoft. Again, you can see the AI pattern here, but Google got clobbered down 12% from a combination of things. Earnings was kind of okay, but when they flubbed their AI demo, bah. But again, as far as I'm concerned, I still think Google will handily beat Microsoft when it comes to AI and search in the future. A lot of people are worried. Meta coming back down to earth. It was very overbought. And the drug pushers are doing quite well too, as well as some of the oil companies. So a very mixed market, but you're beginning to see the cream separated from the chaff, except for Google. Probably very oversold territory right now. So let's talk about the elephant in the room, which is inflation that everybody is obsessed with. Everybody's looking at inflation. And if you look at this chart here, you can see what really caused a bit of a ruckus over the last year or two is that purple one that is core with private new rent indices for shelter. But it's coming back down to earth, which is good. I think it's now about 2%. Core is coming back down. Overall, CPI is coming back down, but slowly, not as fast as people would like. And excluding food, energy, shelter, and used vehicles, not bad. So that's kind of where we are in the simple little summary. Again, thank you to Sanjay for sharing with me. But I think the world just doesn't care about the Fed or inflation anymore. It's like, just get on with it. Let's just look forward and move on. We know they're going to pivot. We know they're going to stop hiking soon. They have to because they keep blowing up their own deficit. Anyway, let's look at the S&P 500 Q4. GAAP earnings are down 23% year over year. This is after 79% of companies have reported, and this is ugly. Remember, only winning companies, or as I call them, recession-proof companies, will get through this recession. Whether we have a recession or not remains to be seen. A lot of people are still talking about that, but it's the third straight quarter of negative year-over-year growth and the largest decline since Q2 2020. And we all know what happened in Q2 2020, so we don't need to go there anymore. But this is kind of scary. And this means stock market could be a little frothy right now. But again, the markets are forward-looking. Remember that. And I always say, they bottom well before anybody even thinks there's a recession, or well before even a pivot happens. So let's look at stocks and 10-year divergence. The years long relationship with the S&P 500 peony blue and the real 10-year treasury yield, we're talking about a lot today, plum color, purple color, whatever you like, has broken down in the last few months, and real yields imply a PE of about 14 based on this 10-year yield versus the current 18.5. That is unusual for that divergence to happen. Again, things are different this time around. I know they're the four most dangerous words in investing, but they really are. Everything is very different. Let's look at this one. This is from Joe Consorti. It is Bloomberg's most accurate CPI predicting economist. His name is Samuel Coffin. Nails it every time. I didn't mean to say nail with the word coffin. Sometimes I say things that come out funny. Apologies for that. But maybe he does put the final nail in the inflation coffin. We'll see. But here you can see stagnant core inflation lends itself to the Fed's mission of holding rates higher for longer. And they are expected to be roughly flat this month. And that is according to UBS's Samuel Coffin. So again, we'll see. But many expect one little 25 basis pointer, maybe two, then stop and then cut. And that'll all happen probably this year. So let's look at GDP outlook. Very important for us investing in Bitcoin and markets, etc. And here you can see the little red box I put inside the bigger red box, 2023 Q3. They expect now a minus 0.1% slowdown in economic growth. And again, a lot of talk about recession. A lot of people think we're going to have a soft landing, but growth has been revised not up, but down. and we'll see what happens. And these are from, I think it's the Philadelphia Fed. I'm not sure where we pull this. But again, scary to see that negative number in Q3. A lot of people think the second half will be bad going forward. I'm one of those people too. That supports it. Now, good news, everybody. Yay. First of all, to all the ladies and gentlemen and everybody else out there, happy Valentine's Day. Give the gift that keeps on giving, which is Bitcoin. And a big thank to everybody in the Patreon community as well. Love you all. I just want to share one thing that's kind of weird. We do have incredible women in this community, but in terms of my Valentine's Day statistics, only 7.5% of my audience are female, but we have the strongest women in finance here, which is great. So happy Valentine's Day to you all directly as well. And what's interesting is Binance, giving Binance a little bit of love today too, because they've been thrown under the bus by everybody. I won't even mention their names, but Valentine's Day, Binance had a survey of about 3,000 people all over the world. And it was interesting that people, I can't remember the exact terms or how they worded it, but the key to a romantic relationship could be people who are enthusiastic in crypto, or mutual people that both are enthusiastic in financial freedom and crypto, and the asymmetric bet that it probably is going forward. And 83% of respondents said they'd prefer to receive a crypto gift rather than flowers or chocolates on Valentine's Day. I thought that was cute. Who wants flowers that'll wither and die within 3 days? And chocolates, well, they're not good for the line. So let's jump on. Sorry for that deviation from the finance news. So here, this is also interesting. This is good news, and it goes counter to the news we heard before about Asia kind of selling, and then the 1,000 to 10,000 Bitcoin holders selling as well. But the third biggest Bitcoin withdrawal year to date happened yesterday. Again, driven by big players. So people are pulling their tokens off the exchange, which is actually a bullish sign for crypto. So we're happy to see that. Now let's talk about this, couple of charts here. And this is from Glassnode as well. And you can see the beauty of this actual report is the digital asset market experienced the first significant pullback since the rally through January. And of course, we know why. The SEC issuing a fine to Kraken for their staking services, legal action by the SEC against Paxos. We covered heavily on DCA yesterday. They're going after Paxos for issuing the BUSD stablecoin, hence Binance is not getting much love right now, as well as several actions against crypto banking partners and payment providers. But the real beauty of this is Bitcoin didn't fall that much. Like literally, it's a 5 to 7% haircut, and it's rebounded already from that bottom. So when you look at that layer of 21,550, that proves to be a pretty strong support level. We did have some resistance up to the 24K level, but bouncing off the 21.5 is very positive. Also a little bit sad because I was looking to get a little bit more Bitcoin at 21K, but that didn't happen. Anywho, onwards, let's look at the Bitcoin non-zero balance. It is at an all-time high. This is a new and unique moment in Bitcoin history, everybody, on Valentine's Day, where there is new innovation on the network, driven by NFTs, or what they call ordinals, and the total non-zero balance addresses now is an all-time high of 44.06 million addresses, and this shows you a huge uptick in Bitcoin activity on the network, and this is also bringing about a lot of activity, active users, which drives value of the network. That's why we like to see things like daily active users and non-zero balances. Very, very important. Let's look at another chart that kind of supports this as well. Kind of related, but this is the top and bottom model here. You can see that now we have 12.9 million Bitcoin are hodled. These are the long-term holders that hold their Bitcoin for over 6 months. And that is a big chunk. That represents just about 67% of the total Bitcoin. But remember, a lot is also, of that 12.9 million hodled, a lot is probably lost, sadly. Again, hardest asset on earth. Let's look at another piece of good news. Look at some RSI. It's been a while since we spoke about RSI, but I like this. This is from Crypto Prof, and he said that the Bitcoin has broken the 200 exponential moving average, as in 2021 and in 2022. And in 2021 and 2022, the stochastic RSI was already overheated They are the two red buttons in December 2021 and April 2022. That's a sign to get out, ladies and gentlemen. You can also see it corresponding to the RSI at the bottom. The pink lines, the pink bubbles, point directly to the top. But what's special this time is now the opposite is true. Now the 2023 stochastic RSI has made a double bottom at the same time when Bitcoin retested the 200 EMA and found support. So this, to TA specialists and astrologists, is extremely bullish. So again, more good news. Now, in decoupling news, the last 90 days, Bitcoin versus tech stocks. You can see here Bitcoin's up 38%, tech stocks about 13%. So again, it's outperforming tech. 2023 is shaping up to be great. And the first month was bonkers, as we spoke about too. And inflation eases to 6.4%, not the 6.3 I was looking for personally. So I was a little bit disappointed this morning when I was up very early. And the pace of moderation slows. That's also bad because if you look at those lines, they're kind of flattening out. We want them going straight down, not flattening out. So this is kind of negative. But they did change the way in which they measure inflation, which means, they're making it benefit themselves. So I do expect this to come down in the next print next time around as well. Now, in some other news, which is basically, George Soros, love him or hate him, a lot of people don't like him because he took down the Bank of England and he invests in some things that people don't like. But he did make some interesting investments here. Again, the headline is Soros snapped up Tesla, etc., Peloton. Maybe it's a rock bottom price, Peloton. But he also dumped some interesting stocks. But he also picked up a lot of crypto proxies. This is why it's fascinating. First of all, one of the legendary investors over time, love him or hate him. I'll repeat that again. I'm just sharing the news here. But he bought a truckload of Tesla, about 250,000 shares at a really good price. And also, what he did was he bought Silvergate Capital, which has been in the news a lot lately. Again, a crypto proxy. He bought Marathon Mining, Mara stock, crypto miner, and he boosted his stake in MicroStrategy. So you can see George Soros is not afraid of crypto, unlike Warren Buffett. And that I find very interesting. Let's look at the fear and greed. It is stable at 50, on the nose, right bang in the middle. And if you look back in this chart over time, last time we were hovering around 50 for a long period of time was back in March 2022, before the wheels came off in April 2022. So again, not bad at all. Let's jump in. Let's talk about some Tesla news. Obviously, as you guys know, a lot of crypto people don't like hearing about stocks, but Bitcoin and Tesla, I believe, are the two asymmetric bets of this decade. And this is from Lathrop. I've been talking about the Megapack. I've been modeling it since November. And here you can see, if you count the number of big white boxes in the parking lot, there's 86 of them. And they are coming out of the factory fast. It is now estimated they're making between 10 and 12 of these a day. But why do you care? Who cares? This is why. So I did some calculations. So the yard supply, 83. It's actually 86. I counted them wrong. It's 86. I forgot to update the model. But assuming an ASP of 2.1 million, that adds per share, earnings per share of 3 cents per share based on a multiple of 30, which should, just the material sitting in that yard should add nearly $1 to the stock price of Tesla. Again, after it moving up $15 today, who cares? But if you annualize that ramp based on 12 a day, they should be able to do 4,380 sandbagged a year at 2.1 million a pop. And remember, they sold these things out until 2024. That should add $46 to the price of Tesla. That's substantial. That's what Wall Street is not factoring in when they calculate the value of Tesla. That's why I'm very confident. And a little bit look at the chart here. You can see it's going for that little double top. Hopefully it'll blow through as the world begins to realize the value that is Tesla. Now, tomorrow I will be on Farzad's channel. He was on my channel last week. I am on his channel this week, and we're going to be talking about all things Tesla for all the Tesla fans out there that are interested in radical asymmetric bets over the next 10 years. We're going to cover everything, and he has a great mind, and we get on the gas and fire. So that'll be a fun show. I'll tweet it out tomorrow as well, right before, an hour before we go live. And to prove that making electric vehicles is not easy, Ford, I was going to say Ford halts the line. They have a battery problem. Houston, we got a problem. And it just shows you that making EVs is not easy. And slowly but surely, people are beginning to realize how good Tesla is at doing it. In gambling news, back to Bitcoin, Drake scooped up something like $1.2 million in a big football bet. There was a football game in the US on Sunday called the Super Bowl. And according to the rapper's Instagram, Drake placed 7 bets for a total of $965,000. And his most lucrative was a $700,000 wager that Kansas City Chiefs would win the game for a $1.47 million payout. And it was in Bitcoin. So nice to see people adopting Bitcoin, gambling with it too, which is kind of scary. But I thought that was kind of interesting. Now, final piece, the ugly section we got to cover. So there's going to be ugly news every week, everybody. I don't want to bring down the Valentine's Day mood, but don't cry for me, Argentina. I should sing it for you all. Argentina's inflation sped up more than expected in January. It's now up to 99% from a year earlier. We cry about 6.3%, 6.4%. They're at 99%. They're losing half, probably a lot more because these are government numbers, every year of their assets. That's one of the reasons that a lot of people in my audience are from Argentina, and they know to take every piece of money they earn and turn it into Bitcoin as quickly as possible for this exact reason. And, everything's going through the roof up there. Food, rent, you name it. Everything's just exploding. So this is debasement of fiat happening fast. This is why we Bitcoin. So with that, everybody, I hope you liked the content. Please subscribe if you haven't already. To everybody out there, happy Valentine's Day. Thank you to the moderators in the chat. And I'll see you all tomorrow on Farzad's channel. And if there's some breaking news, I'll do a quick one here myself too as well. Thank you all.